to the big breaking story. It's a big deal that's just been sealed. Travel portals MakeMyTrip has announced a merger with Ibibo Group, which runs online portals like Goibibo and Redbus. Joining us now to discuss the contours of this mega merger are two of our very own young techs, Kalra of MakeMyTrip and Ashish Kashyap of Ibibo. Gentlemen, appreciate you joining us. As I pointed out, both of you part of our original list of young techs. So Deep, let me start by asking you, who approached whom?
Hey Shireen, thank you very much firstly. Somehow I knew that'd be your question. But let me put it at this, that we did last time. I think we've had a couple of interactions in the past done by people known to both sides. I enjoy a nice healthy rapport with Ashish, so I think, believe it or not, met him at a party and started off the conversation early this year.
Started off the conversation early this year. Deep, now let's go through the details of the transaction before I get Ashish in on the conversation. So what we are given to understand is that you will be, MakeMyTrip will be issuing fresh equity. Can you take us through the details?
Yeah, I'll share with you what is public information now, and very, very happy to discuss that. So fundamental to this deal, and it is the coming together of two large groups. In fact, Naspers, who are 100% owners of Goibibo, as well as Redbus, and that is part of the deal. So at the end of this transaction, MakeMyTrip MMYT will own 100% of both Goibibo and Redbus, in return for which Naspers will own 40% of MMYT, thereby becoming our single largest investor. And then there will also be some adjustments in cash towards the working capital and proportionate working capital being contributed by Naspers. Now, closing and signing, as you know, in large transactions does take a while. So the signing has occurred today. The closing is subject to a couple of approvals. Noteworthy among that is the Competition Commission of India approval. Which will take its own due course. It could take up to a quarter, depending on the commission, and only after that will the companies truly be able to get consolidated and us be able to report consolidated financials.
Just on the issue of the CCI, Deep, what would the combined share be of MakeMyTrip and Goibibo?
So, you know, travel is actually a very, very large sector, and the reality is, while we are market leaders, we have a very small portion of the overall market share in the overall market. So the overall market for travel in the country is pegged at about $25 to $27 billion. And, you know, at last count, we were about $2 billion. So it's really a very small share of the overall market. The overall market in air, as well as hotels, both international, outbound for both segments, as well as holidays, and now bus as well. And travel and tourism has been actually growing quite fast, growing at a healthy clip of double-digit now growth for the last couple of years, and is continuing to do so. So by next year, we're talking about a $30 billion market. And so there, according to us, we are but a small player in the overall pie, but it is a necessity for us to file with the Commission.
Okay. Ashish, let me bring you in on this conversation. Well, congratulations to both Deep and you, Ashish. So Deep and you clearly enjoyed good chemistry and good rapport, which is probably why we're seeing this transaction come to this point. But why the decision to merge with MakeMyTrip? Was it getting increasingly difficult as the competitive pressures increased to function as a standalone entity?
Hi, Shireen. Firstly, thanks for inviting us. And you're right, definitely chemistry did play a very, very important role. And as Deep said, funnily, we actually met up at a casual party. But to your question, I think the challenge, more than competition as a challenge, the bigger one is that we have to compete with the offline market, or rather, we have to bring the offline market online. So if you really look at the key segments that we operate in, the accommodation segment that we operate in, is just 18% penetrated online. And there's a huge headroom for growth, but for that, we'll have to work hard. We'll have to ensure that every accommodation in the nook and corner of this country, every alternate accommodation in the nook and corner of this country is using a technology and an online system and comes online and essentially, brings hence the other side of the network, which is the travelers also online. Similarly, if you look at the other significant category that we operate, which is the bus ticketing business via our brand, Redbus, that's again very much underpenetrated at 15 to 16%. In fact, the unorganized bus segment hasn't, even started using mobile and internet to manage inventories and yields, and there's a lot of work to be done on that front. Even in the air ticketing side, outbound side, that's also right now just basically really, really small. I think the only category which has got some penetration is domestic air. Other than that, this market is totally underpenetrated, and with alternate accommodation and alternate transportation between cities, towns, villages. Imagine two small villages getting connected through organized form of transportation. So
Ashish, I'll come back to you in just a second, but Deep, Deep, clearly the markets like this transaction, like this deal, the MakeMyTrip stock on the NASDAQ is up by over 40% at this point in time. But what is this now going to mean? Ashish has given us a sense of the synergies and the complementarities, but what is it going to mean in terms of additional revenue, in terms of new growth opportunities? What will this do as far as MakeMyTrip and the combined entity is concerned?
Yeah, I think, Shireen, you're good luck for the stock. Every time you cover it, the stock does well. So keep that going. But I think that's, in fact, the growth opportunities and the synergies is indeed the two planks, the two foundation stones pretty much on which this merger has been contemplated. I had said, and then Ashish explained the same, which is that it's really the early stages of this market moving online. It's only air tickets, which in some healthy measure have already moved online. About 50% of all air tickets in the country are bought online. But if you look at all the other segments, very, very early days. So we are very excited that we will have the combined cloud of both the companies of two big strategics now. We have Naspers and Ctrip with us. And so I think we've got all the resources needed to really take on this market and to build a very defensible business and eventually a profitable business, because I think there's very, very healthy margins in this business which can be done. So we're all, I think, very aligned on that overall goal. In terms of synergies, I think we'd like to focus a lot more on the growth side of the business and see where we can cross-pollinate in smart ways. I was sharing with investors a short time back on an investor call, but really what we think is, when you look at customers for, let's say, bus, and a very large number, as Ashish shared, of bus customers in the market, intercity, also needing accommodation options and going, whether they're traveling for work or whether they're traveling for pilgrimage or any other reason, they're looking for accommodation options. We've all been trying to cross-sell budget hotels to them, and I don't think that's happened in a great measure.
Right.
It's beginning to happen, but, it's still in, the 5,000-6,000 a day. However, where we think now the right option for them could lie around alternate accommodation, could lie around, B&Bs and apartments, etc. And so therefore, Right Stay, which we launched a few weeks ago, might be the right partner for Redbus. And we might be able to cross-sell and cross-promote the right relevant kind of accommodation to these customers. On the other hand,
Sorry, I'm interrupting you, Deeper. We're running out of time. Very quickly, what happens as far as the Ibibo brands are concerned, Redbus, etc.? Do they stay? What do you do with them? And also, Ctrip now will have about 10% in the combined entity?
Yes. So very, very clearly, we would like to not only continue with these brands, which are strong brands and have their very loyal customer base, but actually grow them. And if you look at internet businesses around the world, B2C internet businesses, by and large, in all mergers, you will find that strong brands are not only kept alive, but they are grown.